All right, folks, how we doing out there? Good morning, good afternoon for many of you, or for those of you watching this on a replay, whatever time of day it is. Today is Trade School, the 19th of July, and today we got a couple of things we're going to talk about. Going to talk about like the whole notion of how you stop trading with the herd, how you stop becoming this sort of human chum that over and over again happens in the market. So how do you transition from this, somebody that's just going to fund somebody else's account versus how you can get on the other side of that equation? I mean, it's, I hate to put it in those terms, but that's just the way it is, right? So either you're going to get your fair share from the market and pull it back into your account, or you're going to fund somebody else's account. And that's just the way it is. That's the way markets have always been. That's the way they will always be, regardless who or what is trading them. All right, so let's get into today's stuff here. We're going to go with big chart, little doc. I am way down here in the left-hand corner, so you can see my occasional fits of emotion which will come out from time to time as I present this material. Okay, so without further ado, let's get into it here. And then, of course, I will take your questions for anything afterwards. Okay, so again, I got a question from yesterday in the Omnia room. Could you, excuse me, could you define some means or methods to think outside of the crowd? And we're always trying to do this in a programmatic way, or I think this individual was looking for ways like, how can you quantify this, or how can you measure this, or how can you define this in an algorithm so that I can just flip this switch and start doing it? And unfortunately, human beings are not an algorithm. Our subconscious mind is not an algorithm. It's not something that you can really just flip a switch. I've never seen it occur that way. Maybe someday we'll find some ways to do this within the field of neurolinguistic programming. But for now, excuse me, pardon me, got to get that out of there. But for now, I don't know how to do that. All I can tell you is that it's a process of retraining your subconscious mind. And I will talk about some ways in which you can do that. Okay, so without further ado, if anybody is live and watching, let me know if everybody is able to hear and see me and hear me cough, those kind of things, just to make sure that we are working today. Otherwise, I'm talking into a dead mic, and that would not be good. So if there's one thing that you'll learn over time as you trade the financial markets, is that the herd will continually get it wrong. I'll talk about this again and again. That's just the way it is, right? They will buy in at the top and they will sell out at the bottom. This will never change. And people think that it will change with trading bots and with whales and market makers and things like that. And guess what, guys? This has been going on for hundreds of years, and there's no one thing that's going to change that's going to change it. Now, I have seen financial markets change within my tenure. So within my 15 years of doing this for a living, I have seen financial markets change, and it's due to what I call the socialization of financial markets, where all of a sudden everybody cares about it. So everybody wants to protect it. And that's happened just in the last 15 years. 15 years ago, only those that could afford to trade within the financial markets were doing that. Because what we're seeing is a lot more people are indirectly investing. So we'll take questions after we get through with this presentation, okay? So it's been whatever that username is. I'll get to that question at the end. So this is what happens, guys. Retail investors will buy in at the top because we've proven again and again that the pain of sitting on the sidelines watching a market rip to the upside without you being on board is actually worse than taking a losing position. It's horrible. It's a horrible feeling thing, and this is where we were last month and I said, don't chase this, don't chase this, don't chase this. You know, we gave you an early warning before we got over 10K. I said, look out, this weekend we're going to get movement. And man, did we ever get movement. We got 4,000 points of movement over the next week or so. But then that party was over. You had to get in at the very beginning of the party. You can't show up at the end of the party and say, are you guys playing cards? No, you're too late. You're too late. And this is what we can help you do here is stop getting in too late. And then conversely, what happens is when markets sell off, which they usually do after it goes berserk like that, people get very scared and think that it's going to go to zero. And there are those individuals that are out there that will pry upon this and start writing articles saying, market's going to zero, it's going to zero. And so what we have to do is give you the tools to be able to objectively evaluate the market and get this sort of sense of notion out of your head that you have to look for answers from other people. Tell me what to do. I got to know what to do. And that's really the thing I'm trying to tell you here is that, yes, this is a very difficult business to get right, but the more you look for others to tell you what to do, the worse the performance is going to be. Okay, so as long as the majority of traders are either human or programmed to think like humans, which guess what? That's what bots are doing. Bots are being programmed by humans. So unless bots start to be programmed by bots, in which case we've got a different program, we've got a different problem on our hands, Skynet, right? Then this will always be the case. So I get questions every time we do a live session like, hey, what about the whales? What about the bots? What about this? What about that? What about market makers? You know, we have the same thing. You know, high frequency trading is supposedly ruining the stock market. I don't think it is. It's just providing liquidity, trading back and forth millions of times within just a few cents. What's wrong with that? That doesn't do anything. It just provides more liquidity in the market. So I don't mind those things, you know, and we're always going to have bad players in the market. If you had billions of dollars of crypto, seriously, if you have billions of dollars of crypto, don't you think that you could sell a bunch of it all of a sudden out of the blue and cause the price to drop, and then you could take those proceeds and then buy back in again a few minutes later? Now, I don't know if that's illegal or not. I guess I've never had that issue. But you could certainly do something like that. You could torture the market as long as you wanted to. And, you know, buy, sell, buy, sell. You could push the market around, to do whatever you wanted to do. And that's the advantage that those with big accounts can have, is that you can momentarily move the market. Now, most markets are much, much, much bigger than any one individual or institution can really move over time. Now, there are some times where markets are fairly illiquid, and this is what you'll see some of the players do is that, say, like when BitMEX goes into a maintenance window or something, and they know that all of a sudden the liquidity will change for the overall market, and they can take advantage of that. So watch for things like that where people are trying to, I don't know if that's necessarily unscrupulous. It's a live market, and they can do whatever they want to as long as it's not illegal. You'll see those kind of things happen. Okay, but then anyway, that's beyond the scope of what we're talking about here. So fear of missing out at the top of a move is enormously compelling. We've talked about this so many times. You can see it in action just within the community page from the recent highs in June, people begging for direction. Should I get in? Should I get in? Is it too late? Is it too late? If you're asking, then the answer is yes, it's too late. So you've got to be entering when things don't look so good. When the signal shows, right? When the signal shows, it's not going to necessarily feel, you're not going to have any real, you're not going to have a squad of people showing up at your door saying, you know what, we all feel that it's correct and proper to enter here right now. No, it'll never happen like that. You're always, if you look for others to validate your decisions, you're never going to have the certainty to pull the trigger. You're always going to look for that one more data point, that one more thing. And by that time, usually the move's over. Like yesterday, we had a move in the span of about 20 minutes. That was a 1,000-point BTC move. Took 20 minutes. If you weren't Johnny on the spot, it was over in next to no time at all. Fear of lower prices is the other end of this. It causes many to sell into pullback, so the price pulls back and, oh no, it's going to go to zero, right? That's what everybody thinks. Everybody thinks it's going to go to zero. Well, it could go to zero. So they're trying to reduce the possible loss. Like, well, I could sell now and I would take a smaller loss than if I were to get out later. Well, the whole idea is to give yourself a stronger hand. Stronger hand, better entries, able to withstand deep pullbacks without sweating. Okay? Or some other people were looking at the recent pullback and saying, whoa, that looks scary. I don't want to get in that. I want to buy the dip, but not this dip, right? That's what everybody says. I want to buy the dip, but I don't want to buy this dip. It doesn't feel right. How do you quantify that? You can't. So we've all done it. Doesn't seem fair. Makes no sense after the fact. We want to blame something or somebody for this. But it's you. It happens over and over again without fail. This is humanity. So how do you get rid of it? So we can talk till we're blue in the face about why it happens, but until you put your mind to it, it will continue to happen again and again. How do you trade against the crowd? So there are a few ways to accomplish this. And for most people, it's a transitional effort. It is not a binary effort. I don't care what algorithm that you think that you can define. I don't care what book that you think that you can read over the weekend. It's not going to be that fast. It's a process. It's a process for everybody. Because you're dealing with a very analog creature, which is your subconscious mind. Your subconscious mind has got to be retrained. And it is not something that occurs very quickly. It is a process. I'm still working on mine after all this time, right? It's a transitional effort. We can only get better at this if we know what to do. So the root issue here is that the brain processes these events as risk, okay? Risk of missing out on a move to the upside, risk of going to zero to the downside. We all look at this and we just assume worst case scenario here, and that's the way the brain works. So you have to flip the paradigm around to teach your brain that these events constitute an opportunity. Okay, it's a different way of thinking about this. It's an opportunity. So for the vast majority of people out there, this is the stuff of dreams. So you see a move like this and you're like, oh, this is awesome, right? And you want to get in on it. This is opportunity. This is what you think. Like, oh, all the news is positive. Everybody's happy. I want to be part of this big, happy crowd. But I want you to look at this as risk. And this is going to be hard for you to do. It's going to be hard for you to be a sourpuss while markets are going parabolic like this to the upside, or exponential, whatever this is. Hyperbolic, I think, is the actual truth. I want you to learn how to get an entry here and not up here, right? This is where the entry is. You know, maybe it's a hook of some type, maybe it's an oscillator cross, maybe it's a moving average cross. There's going to be an entry down here. It's not going to necessarily feel like it's got a whole lot of certainty with it, but that's the way that markets work. So look at this, and you should look at this as risk. Hold on, I'm getting scratchy here. I'm going to take my anti-scratchy pill. These are curiously effective. These are called Fisherman's Friends. Anyway. Okay, so look at this as risk, which is a different paradigm, right? Most people do not look at that as risk. And then look at this as potential opportunity. But for most people, they're going to look at that as risk and say, oh my God, it's selling off. This is horrible. This could go to zero. Everybody just assumes it's going to drop to some unheard of figure because it may have happened once a long time ago. You got to remember, after 2008, October of 2008, where markets just got crushed. This is really what started Bitcoin out, and Satoshi Nakamoto, like, this is stupid. bailing out this group and not bailing out the other group, and this is also arbitrary, that he wanted to create something that was completely decentralized and under no one person or thing's control. Okay. So October 2008, we had this massive, massive crash in the equity markets. It was really bad. It was really bad. And people were scared to death, but they continued, and still to this day, they continue to look over their shoulder to say, well, that's a red candle. This could be the beginning of the next big, big crash. And I know people that literally spend every day looking for a crash to show up because it happened once upon a time, 11 years ago. And, we can't live in the past like this. So for most people, this is bad. You feel pain. You just want to bury your head in the sand and wait until it comes over. But this is opportunity. You have to be willing to do what everyone else either will not or cannot do. And this is to redefine what risk means to you. So this is not so easy. Again, I can write down all the words, but actually making this happen is a little bit more difficult. So most people see risk as a bad thing, and they will do anything that they can to remove it from their investing. Risk is horrible. This is horrible. I get calls like, hey, Doc, how can I learn to trade without any risk? Money market, certificate of deposit, cash in a bank. These are all things that have no risk, and that's what they should do until they can reframe their paradigm. So risk is your friend, but one that you must respect. Without risk, there is no reward. This is that yin and yang that we have. Without risk, there's no reward. The more risk that you take, the more potential reward that there should be. Got to be smart about this. You don't want to take risk without reward. Like, hey, if I jump off this building, this is going to be really, really exciting. It's going to be a big reward because I'm going to get a big adrenaline rush. Well, that's great, but there's not that much reward for the risk that you're taking. Some take the concept too far, trying to adjust. They leverage risk without respecting it, right? They're trading too much of their position. And so what happened is they get burned and they say, well, risk is horrible. I didn't know about this and risk is horrible. And so they revert right back to where they were as they were taught when they were 2 years old. Don't risk anything, don't get hurt. So risk must be leveraged to seek reward, but it must be managed, right? Think about an insurance company. What does an insurance company do for a living? Most of us don't really think about that, do we? We just think of an insurance company as somebody that's, the way that they frame their advertising, like a good neighbor, State Farm is there. They're your neighbors. Well, what are they doing? They're actually taking risk off of your hands, aren't they? That's what an insurance company does. They take risk off of your hands, and you pay them to take that risk off of your hands. Now, why would they do something stupid like that? Wow, they're taking a lot of risk, aren't they? Well, what they're doing is they're managing risk. I mean, for a small monthly payment, you can have them take the risk of owning a house off your shoulders, or owning a car, or anything else, any other asset like that for a small monthly premium. And so it's their job to make sure that the risk that they're taking on is not overly high. And so they have numbers and models that prove that if they take in so much business, that so much of it will get turned back in as claims and so forth. So it's a big numbers game for them. But they also know that selling hurricane insurance on the Gulf Coast comes with more risk. And so they need more reward to be able to handle that. So the premiums are consequently much, much higher. That's the game that they're playing here. Really, in some ways, it's kind of legalized gambling, if you will. So how do you begin the process of changing your brain's perception of risk? This is kind of the crux of the biscuit that we're talking about here. Number one, find your one thing. If you haven't heard me say this before or heard me talk about this concept before, find your one thing. This is very, very important. This is something that I had to do with my own trading. It's like, and this goes back 15, 16 years where it's like, I learned all this stuff, right? I learned all these technical indicators and charts and studies, and I was learning to trade all these different option strategies, and I knew all this stuff, and I was losing money because I had turned myself into a jack of all trades and a master of none. Not specializing in one thing. I was a generalist. I was all over the map, and the person who wins in that scenario is the broker. They will always win. Okay, so find your one thing. So basically, I almost metaphorically just cleared my desk, just took an arm and swept it across and had a clean desk and said, okay, I'm going to pick one strategy, one chart, one thing, one time frame, one of everything. That's it. I'm only going to do one thing. So this could be something as simple as saying, okay, I'm going to pick Bitcoin and I'm going to take a stochastic cross every time it crosses to the upside on this time frame using these parameters on this oscillator. I will take an entry with X% of my capital. Here's my entry, here's my stop loss, here's my risk that I'm going to take on the trade, here's my target. I will take every single one of these. Or you could choose Bitcoin and I'm going to be a futures trader on the 12-minute chart. This is where I'm going to enter. I'm going to look for these conditions on the 1 hour and the 5 hour chart. And that's going to be my one thing. Or it could be options. I'm going to learn to sell options on Deribit, and that's going to be my one thing. That's all I'm ever going to do. This is how I'm going to risk manage the position. This is the size I will use, and this is my goal. There's so many different ways that you could define your one thing. And it's going to be different for everybody. Everybody's got to find their one thing. It's going to be something that, as Brett Steenbarger says, gives you the rage to master. You've got to have the rage to master. You can't say, hey, Doc, tell me what my one thing should be, because my one thing is going to be different from your one thing. So I pick one thing, and I got really, really good at it in a very short period of time. And this is what I keep telling you guys is like, if you pick your one thing, and it should be something that gets you really excited because you want to get better and better and better at it. And you'll need that rage to master to be able to punch through the obstacles that will come. You will be like Sisyphus rolling the ball up the hill. You will get it part of the way, and then that stone will roll back down again. And you have to start over, dust yourself off and say, okay, what did I do wrong? How can I not do that again? Sisyphus will then start rolling the stone up the hill again. And eventually, once you get it, once you get all of your holes plugged, you will roll that stone over the top of the hill and down the other side. That's the whole point here. So find your one thing. Number 2, refine your skills and get really good at this one thing. This will start to shift your brain's perception of risk. All of a sudden, instead of being scared every time you enter, all of a sudden you'll see your setup and you'll go, oh, good. I can't wait to enter because I know that there's a payback for me. And this is that Pavlovian response that you want to have with your brain. You want to teach it that risk is good because all of a sudden we start getting rewards from taking on appropriate pieces of risk. Number 3, create a strong framework of risk management so any mistakes don't send you all the way back down to the bottom of the hill. There is nothing worse than taking one trade and blowing out your entire account. There's no reason to do that. None whatsoever. If you're using risk management rules number 1, which is to define your stop before you enter the trade. And then number 2 is to limit your risk to that per trade no more than 2% of your capital. And as many have said to me during some of the public webinars that, hey, even 2% is a little bit high. Like in a futures trade, you want to, unless you've got a super small account, 2% might be a really big trade. So there's a question here. Does one thing mean a single market only, like LTC versus BTC or something like that? I would refine it down into the very smallest parameters that you can. I would refine it down to a single instrument or pair, a single time frame or collection of time frame multiples, 1x, 5x, 25x, whatever you do. It depends on whether you're doing day trading or swing trading, what have you, right? I would get it down to one thing. Now, you got to make sure that it's something that gives you enough to be able to get some practice in here. So if you're only getting one trade setup every 4 months, you're never going to get good at something, right? So you have to balance it out versus something that you can do on a repetitive basis, because the more you do something, the more practice you get. Repetition equals the mother of skill. So create that strong risk management with rules number 1 and number 2 of risk management, and don't start all over again just because you take one small loss, or you allow one small loss to turn into a huge loss. Number 4, create a continuous learning process environment so that you learn from your mistakes and continually refine your approach. So every class that I teach, I show you guys how to set this up into a tracking spreadsheet and to use Pareto analysis on it so that you're getting better and better and better every single time. You identify the root cause, you eradicate the root cause of losing that trade, get rid of that stuff, and then work on the next one. Number 5, become independent from the crowd so that you avoid any form of bias. One of the biggest mistakes that people make is that they are looking to, right? Because what you're taught early on is that you need to seek out different opinions amongst everybody, right? So this is always valued in society, like getting a second opinion on your medical diagnosis. Even a third opinion is valued. Actually, I'm glad my daughter got a second opinion. They were about to send her off to knee surgery, and the second doctor said, no, that's not necessary. There's nothing wrong with the inside of the knee. It's the musculature imbalance. Okay. Saved her a surgery and probably years and years and years of life on her knee. Good. That's a good thing. That's a good example. But second and third and fourth opinions in the market, when we start to socialize our opinions, this is what happens, is that all of a sudden you have no idea what to think, because this person says this and that person says something else and this person says this, and next thing you know, you're just wound up in a ball. And this is where you auger in. You just, yeah, bam, you don't know what to do. And so what you do is you look for the person you believe the most, and then zoom, you got confirmation bias. This person told me this, and I'm going to seek out everything that I can that aligns with that confirmation. This is called the reticular activating system in your subconscious mind. And what it's doing is it's feeding that specific information back into your brain, only that which you're looking for. This is why two people can have an automobile accident, right? They meet in an ungainly manner, and they both have two different stories because they will both see what they want to see. This is confirmation bias. This is what you see every day. This is why people argue all the time, because they see things from a different point of view, because they see the point of view that they want to see and not particularly interested in your point of view because that's what you see. This is always this is why courts exist, right? Because trying to get to the bottom of what actually did happen and not just your opinion. So becoming independent from the crowd means don't look for opinion, look for fact. And the best way that you can look for fact is to do it yourself. So at some point you have got to cut the umbilical cord from the opinion sites. You've got to cut the umbilical cord from, I can't make a move in the market until I hear this person's opinion. Or what do you think? If you see something posted in the Discord room where it's like, hey guys, I'm about to take this trade. What do you think? Okay, that's a cry for help. That's somebody that doesn't have a strategy. That's somebody that doesn't have a... Now, there's nothing wrong with saying, here's what I think, this is what I'm going to do, shoot holes in it. Okay, that's all right. That's all right. I don't mind that so much. Shoot holes in it. What do you guys see that I'm not seeing here? But the whole notion of what do you think is a cry for help from somebody that says, I don't believe in what I'm doing, so I want you to either affirm or deny what I'm about to do. And that's bad. You got to be an independent thinker from the rest of the crowd. Get rid of your bias, and that's the only way to do it. So none of this is easy. None of this is binary. This is not something that you read a book on or pop an MP3 into your player and all of a sudden you program yourself like the, jacking something in the back of your head like the Matrix. Wouldn't that be fun? Right? So none of this is easy. It takes time to recondition your subconscious mind. There's the huge temptation to ask, hey, everyone, what should I do? Puts you right back into the herd. So when you see that in the room, right, don't be surprised. This is human nature in action. And, sometimes what I'll do is I will sometimes quite brusquely push somebody back and say, well, what's your plan tell you to do? And that's not what they want to hear. They're asking me to recondition their subconscious mind, and that's not the way to do it. So continually seek to refine and separate yourself from the pack. Don't try to be part of somebody else's pack, right? Fill only those gaps that you've identified. So maybe you say, okay, I've got a gap here and I have a problem with this thing. And this one thing here, based on my analysis, is like, I need to get a lot better at this because I keep screwing this up. Fill that gap. Don't look for somebody to provide some kind of, overall super glue that tie everything together. Don't seek reassurance. That's what we're all seeking, is because we tie risk with something that's bad. We want reassurance because it's scary out there. Okay, I get it, but we're absolutely doing the wrong thing for you to try to give you reassurance. So once you've found your one thing and are experiencing success with it, keep refining it. Don't give up and start complicating things again. Hey, I got this one thing. It's all good. Well, look, it might take you a year before you can say, you know what? I'm so good with this one thing. I'd like to bolt something else onto the side of it. And that's okay. There's nothing wrong with that. I mean, I trade plenty of different strategies, but they all tend to be sort of centered around the same kind of thing. I use the same kind of analysis for them, and that's what ties everything together. So I can use different time frames, right? I can use different strategies. I can do some directionally. I can do some non-directionally. After a while, you can bolt different things onto it as long as it's, you're able to separate those things in your head. So for most people, though, just getting going in the right direction, that is a tremendously life-changing thing. Once they're able to create a system that creates a positive return, boy, that's something that very, very few people can say that they can do, right? So this is how you stop trading with the herd. Okay, so that's, I will leave it at that and see if there's any questions. See if there's any questions for today. So, itch bin. I don't know if is that ICH bin? Itch bin. What analysis did you use to identify entry at 9.1K? Okay, so for those of you that don't know, let's go over to here. Let's bring up the chart. So this is something I talked about for weeks, right? So you can see this a little bit better if you scrunch everything down. And I'm a big believer in swings. So markets take swings. They swing up, they swing down, swing up, and swing down. They swing up. And what is called a swing test is when you have a former high, which was resistance, and becomes new support. Normally gets tested from above. And so what I did was, we had this whole notion of this, I talked about this value zone. And so I set this up like as the price started to pull back, I said, okay, here's the swing test, which is at 9,100. That's the bottom of the value zone. The top of the value zone is a 61.8% retracement. So most of these pullbacks get down to somewhere around the 61.8% retracement. And I could have put an entry there, and it would have provided a short-term swing trade to the upside from 10,000 up to, what did we get? Like over 13,000. That's pretty good. I mean, that's not a bad swing if you're just looking for a swing test, right? So we had a couple of these entries at about 10,000, but I was looking for what I considered to be the bottom of the swing, and that was at 9,100 and just inched down through there. So we did get pretty darn close to the bottom tick. Now, I don't know if that's the bottom of this move because on the 5-hour chart, we're still a lower high. Still a lower high. So this could, right? So this is a series of lower highs and lower lows. Lower highs. That's still a lower high. Now, this could turn out to be a higher low. And so if we pull down and then break above there, and especially if you break above this one here at 11,000, then it's all over. More than likely, it's all over. Now, the only thing that I will say is that this has to turn into a weekly consolidation because we're not quite there yet. So if I pull this up from a weekly perspective, this will just take a minute here. We're just now starting to get back into the recharge zone above 38. So this really could stand for another couple of weeks of chop in this area, and that would be ultimately good long term. I don't want to necessarily see it just blast off from here. But remember, when I'm trying for entries like this, this is just a value entry, and I put this in the community trades area. I just said this is a value. This has no stop. This is just me adding to my Bitcoin position for longer term hold. And I determined that 9,100 to me is a value entry. It's a value entry. So I don't care if it's the bottom tick. I just think after pulling back from 14,000, a 5,000 point pullback is pretty good. 5,000, that's almost a 40% drop off of the highs. That's pretty good. And if I can enter on value entries like that over time, I will continue to build a position that has a much lower overall cost basis, right? That's kind of what we're trying to do. Okay. Any other questions? Anything else for today? Anything else for today? So we can watch this. We're seeing this 1 hour chart had a big swing to the upside, and we're just consolidating that now. It's back up to fully charged. We'll see whether or not if we're able to break above, say, like 10,453, and especially if it's able to break above 10,700, then we may have something on our hands. But again, I'm not that interested to see that it breaks out immediately. If it's going to chop around for the next week or two, ultimately that's much, much better for us. So there's some other things here. Let's see, we can go into some options as well too. Let's refresh the page. Hello. Okay, so again, I'm building an options class, so we're going to spend more and more time talking about options. Checkmate actually is part of the weekend report is going to have an article on options and how he's using them. And I've already read it. It's really well written and it's going to be very useful for you guys. Generally, what we're going to be doing is focusing around selling options, not buying them. I don't want you to use options as a spot replacement. If you're going to use a spot replacement, if you want something with leverage to be able to trade the spot for less than buying it, since we're going to be getting to some expensive prices here, if this is going to continue to rally well above 10,000, then a single Bitcoin is going to be 5 figures. And that is, for some, that's beyond the means of what they're able to spend. It's not cheap for anybody. And so being able to leverage the gains on that for a fraction of the cost is something that futures are really best at. Futures or perpetual swaps or whatever you want to use with them. However, selling options is where we become the insurance company. So we can do something like this. Like right now, the price is what? It's 10,000 whatever. I forget what the price is right now, but let's say it's somewhere up in this area here. Well, it's got to be somewhere around 10,500 because this is the first option that's in, or this is the first option in the money right here, which is 10,000. Here's the first option out of the money. So it's got to be somewhere around 10,500. So you could say for 1 week, you could say, hey, I'll go ahead and sell the $9,000 put, and I'm going to get paid somewhere around like $170, $180 to do that. And as long as the price stays above 9,000, then I just get to keep that. Now, even if the price goes below, and this is going to be opposite here because of the way that they do the strikes, but even if the price goes below there, you're just going to pay the difference between what it settles at versus 9,000. So there is the potential that if it drops significantly below this, this is where you have the unlimited risk curve. So the risk curve looks something like this, right? So there's 0. As long as the price stays above the break even, here's the strike price. So this is 9K. There's 9K there. As long as it stays above 9K and higher, you get the premium here. That's the return. You don't get unlimited returns to that. That would cause you'd have to buy a call option to do that. But as it drops below 9K, this is where your losses start to become unlimited down to 0. Okay. So here's a question, and once I finish up with this, Christoph, I'll answer your question. So that is the selling puts, and so you're going to hear a lot more about this. So the way that I'm going to structure the class as I go forward is to probably the first few modules of the class are just going to be basic blocking and tackling, like what is an option and why on earth would you want to trade one of these things? And it's going to be my objective to show you how much you already know about options. So believe it or not, you already know about options. It's just that you've never used them in this manner before. So I want to reacquaint you with what you do know for that. And then there's going to be a certain amount of just mechanics of like understanding that every single option here has got its own market. This is where it gets to be much more confusing. So like the 26th July $9,000 put has got its own market there. It's got its own market. So there's 196 Bitcoin of volume just on that strike and on this date. And there's 785. That's just today. There's 785 Bitcoin open interest that are sitting on that strike. So there's a fair amount of volume that's happening through Deribit right now. And this is why it's exciting, because that's going to be a market that the big boys want to get into. And what you'll see is that over time, the bid and the ask are going to continue to get tighter and tighter and tighter. So this is a $30 wide spread, and you can see just the spread of the BTC on here. So don't be fooled, because all the trades are executed in BTC, not in dollars. They just put the dollars on here to represent what it's worth. And it's just a quick conversion for them. Okay. So this is mostly what we'll be doing so the class will be just very basic, like what's an option, what's a call option versus what's a put option. What's the difference between selling and buying a call? What's the difference between selling and buying a put to open the trade? Very, very different. Completely opposite, right? How do you risk manage these trades? And then we'll get into the actual strategies. So the actual strategies and how to manage them will be something that we'll do further up in the course. So there's a lot of groundwork that you have to cover. There's a big foundation that you have to fill in before you get to the point of being able to trade these things. Okay, so number of questions here from Christoph about how was it when you quit your job and started trading for a living? Um, Boy, I look back in that now, and I'm like, that was, let's see here. I'll just go full screen here. I look back in that now, and uh, I wouldn't recommend anybody did to do what I did, because we were a single income family at that time. So my wife was still staying at home with the kids. So I had to go outside of, so I was coming from a relatively secure career in a technology field that I've been working in for the past, at that time, it was probably, I don't know, um, 15 years or so, 17 years, I think, in my field. So, it was doing quite well. And I gave it all up. I just gave it all up. There was two things pulling and pushing me. One was inspiration and the other was desperation. I was so bored. All we did at my office was fight. We had just gone through a big, it was it was a former three-letter acronym telecommunications company that got all squashed together. So all these siblings got thrown into the back seat of the car because there was just this huge rush to acquisition back in those days. And so everybody was just playing games with each other. All we would do all day long was sit on conference calls trying to figure out integration and just yell at each other. And it was just tremendously frustrating. There was just no sense of accomplishment behind anything. So that was sort of my desperation, is that, here I was, I felt like I was in kind of a glass ceiling. I felt like my career had peaked out. I felt that I was just going to spend the next 20 some years just toiling away. And quite frankly, when you get into your 40s and 50s and you lose your job or get laid off, it's very difficult to go find something else, because you're in the upper end of the salary curve and people look at you as damaged goods. And it's easier just to get rid of you and to hire some, young kid on board without your bad habits. And so there was some sense of like, man, I just don't want to do this anymore. And I'm sure a lot of you are out there feeling the same way, perhaps in your careers, or, let's see, what was I? I was 42 at the time. And, feeling like, wow, I've already hit the glass ceiling. And it's tough to feel that way for the first time. You'd gone from being a rock star at what you were doing. I was the guy that would ride in on the white horse, travel around the country and do stuff. And all of a sudden I was gone, like literally overnight. So that was there from a desperation perspective. The inspiration perspective was I'd found my one thing and I was really, really good at it. And I could crank the wheel, and I was like, let's do this. And I remember it like it was yesterday. I was like, I was tired of making excuses as to why, well, that wouldn't be safe or this wouldn't happen. I just wanted to give it a shot and to see what happened. And there's a thing called the corridor effect. Like once you step outside the door of what you're in, all of a sudden you realize that there's a lot of doors down the corridor, and each one of them leads to a different opportunity. What happens is when you're kind of a prisoner at a corporate environment, you don't really have the latitude to be able to do things. And you realize that once you're out on your own, you can do anything that you want to. And also what I found was like, so the first few months of trading were alternatively like, empowering and also scary as hell, quite honestly, because it's like, okay, if I lose this trade, we don't eat this week kind of thing. And so I was like, wow, this is pretty heavy duty. And it's like, I went through a lot of roller coaster ups and downs on that. And so that's, again, something that I would not recommend to a lot of people, like have your stuff together before you do something like that. So I made a very rash decision, I think, to quit, just based on nothing more than just belief. Like, I know I can do this. So you walk the plank and you're out there in the middle and you're like, uh-oh. But then what I found was that most entrepreneurs have 7 different forms of income. And so what I did was I started to, and it happened all quite by accident. So this whole mentoring thing happened by accident. All of a sudden people started showing up at my door saying, show me how to do this. Like, I'm not going to leave here until you show me how to do this kind of thing. And, you know, that led to a really harmonious relationship, because all of a sudden when I was doing that, I was accountable to other people. If I would do something, do a trade in public, I was accountable to other people, and it made me much, much better at what I did. So that's really been the story about how that all happened. So sorry if that was a little longer than it should have been, but that was a journey I don't recommend for everybody. And I would certainly recommend that most people do it in a more cautious way than I did. But it's possible to do. So the final one is, how did you know you're to go 100% into trading? That happened. I mean, it was, I was at a seminar of all things. It was like, I was at one of these Get Motivated seminars. It's like where they pack 20,000 people into a stadium and they trot out all these motivational speakers that each one of them has got something to sell. And it's kind of like, okay, whatever. And then this guy, you know, my thought at the time was a bad day at a seminar is better than a good day at the office, because I was just so bored at the time. And all of a sudden this guy started talking about stocks and options and covered calls and technical analysis. And I just lit right up like, wow, wait a minute. Hey, what's he talking about? I love this stuff. And I literally got up and ran out of my seat to sign up. I was that, and I'd found it. It was sort of like that awakening, like this is what I want to do the rest of my life. So that was it. And it's kind of been like that since that day. It was like, sometimes it takes you a little longer than others. If you're lucky, you find something like this when you're in your 20s. And I just happened to be in my 40s at the time. So I got a little bit late start, but what I found was I was able to use a lot of the stuff that I had learned in my earlier career to make a quicker transition. That's all it was. So hopefully that's not too boring of a story, but that's where it is, right? We're all just looking for freedom. We're all just looking to be able to do what we want to with our time and choose to do so. And it's been quite a journey for me, because what I found was, for me to do this, I didn't have any knowledge of the brain and how the brain operates with risk. I mean, I sort of accidentally did that. And I kept running into these roadblocks and saying, why the hell am I doing this? Or why did I do this stupid thing on this trade? Why can't I get past this point? And it came down to the subconscious mind. And so I said, well, I've got to learn this, because if I'm going to do anything with this, I've got to get past this point. Otherwise, I'm going to plateau and now not allow myself to get past this point. So this is why I say that trading and investing is I'd say at least 90% about understanding how to leverage your mind. And maybe at the very most 10% of all these bits and bytes and moving averages and those kind of things. That's just the blocking and tackling of trading. That's all fairly simple. And, you know, this is where everybody goes to at first. But if you're going to make a dent in this business, if you're going to stay in this for a long time, you will eventually migrate towards understanding how your own mind makes decisions. Because I state again and again, it's not you really trading versus the market. It's you trading versus yourself. It's you trading versus yourself. It's the contest versus yourself that you have to win first. It's not the market. The market is out there every single day just trying to provide you information. It's not holding anything back from you. It's not the whales. It's not the market makers. It's not some bot. It's not some dark pool of liquidity that's hiding things from you. It's out there every single day showing you exactly in the naked truth, exactly what's happening with the price. But you can't see it because you've got a bias, because you heard from somebody that said it was going to do this or that or whatever, right? It's our inability to see through the lens that we stick in front of our face that prevents us from success. That's really what it comes down to. And at some point, you'll see how simple this really, really is. Okay. Any other questions, guys? Anything else that you want to talk about? Again, The options class is coming. I'm in the process of moving right now. This is all tremendously like, so many things to coordinate right now. And there's such a stress on the time that I don't know when it's going to start to get produced, but I'll do it piecemeal. I'll release it a piece at a time so we can at least get some traction going forward on it. And it's my hope that within a month or two here, we've got some real meat on the class and we can get some momentum here. All right. Nothing else seen. So we're pressing on an hour here. And so I think that's enough for, as always, guys, if there's any other questions that you have, please let me know through email or just hit me up in the Discord room. Email's probably better. I tend to get lost in Discord. There's just so many messages in there that it's tough to keep track of any given time, but DM is always welcome as well too. You guys have yourself a great weekend, and I will see you on the other side. Take care, everybody.